Hey there, welcome to the channel. So today is Sunday, May 1st, 2022. Just want to take a little look at what's coming up for the week ahead. All right, so the first thing I note coming up for the week ahead is that earnings. There's still a lot of earnings going on. Looking at this calendar, the next 2 weeks, like I see just this week coming up, it's going to be like about 2,600 companies reporting, and then the following week it'll drop off a little bit. But we definitely have like heavy earnings reports, and just I didn't know what companies are reporting, but I just note that I saw that like AMD, Starbucks. So you're going to have some tech. We have Starbucks. There's probably some other companies in there. We'll have to kind of get into that later on. Now, the other thing going on this week coming up is because it's the first week of a new month. So we're going to get our non-farm payrolls. So this is going to be interesting. So actually before that, I believe on Wednesday, we get the ADP, which is usually watched because it gives some kind of a reasonable window into what we might get for the non-farm payroll. So you're going to have that coming out this week. So that's kind of interesting. But really the big one is the Fed meeting. So on May 3rd and 4th, so on the 4th, they should make their policy statement, and that's where they should come out with the rate rise. Now, the current estimate is that they're going to come out and raise by 50 basis points. All right, let's look at some charts. Okay, so last week left off with really a lot of just a really bad day. So basically looking here, we are at the IWM Russell 2000 ETF. It's like new lows. So it's actually really quite horrible. If we look at the high tech stuff, the ARK-K speculation bucket, this thing is putting in solidly new lows. So that's just looking terrible. Now, if we look at the QQQs here, what we see is like it put in new lows. I mean, it broke through there, and I had bought some, which not financial advice, which I wish I didn't, but we'll see if we can get a little pop to get the hell out. But I don't know. It's pretty bad, and then even the SPY is broke into the low. So it broke this stuff, and it's kind of like really working to get below that wick there. So these markets are really just getting hit. And probably the most stable would be our industrials here. So also what's coming up this week is oil. Now, what I've been reading is that, okay, all the EU countries have agreed that they're going to ban Russian oil. Okay, fine. But apparently they're going to vote on it this week or something. So it's not official yet. So hopefully, we'll know about that. So that's going to be interesting. So it's kind of a perfect setup here in that our oil has been coiling up in a symmetrical type triangle. Once again, not financial advice. I'm betting that it pops because if they do that, if they do ban that oil, even if they take their time and take 2 months to do it, it's just going to increase the pressure on it for sure. Other thing going on is our 10-year yield is still just pressing up into the 3% range, just really pressing up. And then the other aspect that's going on with it is the dollar as well as exploding. So if I could just look at this ETF here. So, I mean, look at that week last week. I mean, that's a significant bar. That's like significant moves for currencies. Currencies are not, I mean, movements like this in currencies are significant. I mean, companies aren't, we're not trying to make money in currency. You're trying to run a business. And when this thing's moving against you, depending on what position you're in as a company, it really can create a lot of headaches. And then also, the other thing is that these interest rates move, who knows what's going on in the banking system, because if you ever watch the movie The Big Short, all this stuff with the swaps going on. Well, they have interest rate swaps, and one of the things that will happen is, I'm a company, or I'm a farmer, or I'm this and I'm that, and I want fixed rates, but I can only borrow at floating rates. Okay, so you take the loan at floating, you buy swaps to get it fixed, et cetera, et cetera, et cetera. All kinds of stuff going on. So someone is probably making money, someone's probably losing money. But if it moves too fast, that's always your concern, that like it's going to break some of the plumbing in the system there, because anything moving too fast, if an interest rate swap, if you were, for example, if you're a company and you wrote an interest rate swap at somewhere over here, and you wrote it for a year, and so you're like, okay, and you wrote the interest rate swap, and you promised them a rate of 2.5%. Okay, fine, 2.5%. But as this pushes up and it's costing you 2.7%, you're losing money, or you're struggling to make that position work because, and it's kind of still going against you. So this is the kind of thing that could be happening out there. And I don't see anything. I don't see any problems per se. And I do not honestly have enough information about what would be going on in the plumbing down there to see where a problem would be, but it just makes you wonder. Anytime things move quick is where you have issues. And then looking at the earnings, Amazon just left us with crap on Friday, man. Just got 14%, just hammered. And I need to look at their financials, but apparently the gross margin wasn't as good, and people weren't happy with the guidance and everything. And then if we look at the Apple, Apple was even down, but Apple's in a better position, but they were down like 3.6%. So that's where we left off on Friday. Gold, gold it's interesting because with the war and everything, you would think gold would be doing better. If you look at this weekly technical, you had this breakup and you got this little handle, but it really got hit so hard. I mean, this thing got just slammed like 2 weeks ago, and it just hasn't recovered. So, and with the dollar being strong, I mean, even though the dollar and gold can go up together, for sure, especially a paper, this is a paper gold asset. It's just kind of, gold doesn't seem to be responding to the inflation like it used to maybe in the past. And it would be under pressure. I mean, if the dollar is going up relative to other currencies, then it could put pressure on gold, even though they could go up together. So I think that's where we're at. It's kind of interesting because you would say like, hey, look, with the Fed coming out, with more earnings coming out, is, would I expect more volatility or less? I don't know. I don't know. Like my gut feeling would be like, oh yeah, there's gonna be more volatility around the Fed statement. But if the market agrees 50 basis points, it could be, just sell the news. It's like, okay, it's done. Yeah, they did it. They did what we expected them to do. And, maybe it'll just not be a very volatile week. Really hard to say. I just think that, probably we'll get some move, a breakout on this oil here could be the case. And that could cause some problems too. Another interesting note, I was looking and I saw that US production fell a little bit. So they track this. This is US Energy Information. They track, US field production of crude oil. And you can see that we had this peak, and this was like in 2019. We were producing, 15,572,000 barrels per day. And we dropped off after Cerveza. But the thing is, we're not back there yet. We're still not producing where we were in 2019. Now, 2019 compared to 2010, we had ramped up production. So there was a ramp in production. But the point is, even though the prices are really high now for oil, it's not like in the US that we've ramped our production back to where it was in 2019. We just have not gotten it there. And then if we look here at the monthly data, you can see that basically in 2019 for February, we were producing 11,653, and we're actually below that at this point. And matter of fact, as compared to January, we were at 11,362. So we dropped a little bit in February as compared to January. So that's an interesting thing because the price of oil was not where it's at. You're talking about last year, oil was much less, and yet the price of oil going up to the extent it has is not driving enough increased investment in the US to produce more oil. Do you see that? You see what I'm trying to say? All of 2019, where's our Brent at? Our Brent is at, call it $60 to $70, right? And at $60 to $70, the US was producing more oil. Go through the pandemic, I get it. The price drops off, activity drops off, all that makes sense. Production drops off, right? But here we are in 2022, and our oil now is averaging somewhere around $100, right? And so it's actually rather amazing that in the US, our oil production hasn't ramped up. Matter of fact, it's less than it was in 2019, right? It's less production now than there was in 2019 when the price of oil was half of what it is now, just estimated half, right? So that's kind of really interesting. It kind of says that, the producers are not believing it. The oil producers are just not buying that this is going to be sustainable or whatever. Or they are betting that, there's going to be a recession very quickly and they don't want to be out there investing and producing that oil. So yeah, I found that very interesting. I mean, you can see that they are ramping up. It's not like we're not producing more. They're trying to ramp up that production. You can see that they are ramping it up, but they're kind of taking their time about it. They're not back to where they were. So that's kind of interesting there. All right, well, I think that's it for this one. In summary, lots of earnings, the Fed meeting, and the job report. With a negative GDP, will we see something in this job report? Will we see a loss of jobs? Interesting. I don't know. That's it for this one. Bye.